Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live at yorbamedia.com. All right, my next guest, Nick Santiago, President and CEO in the Money Stocks. Nick, welcome back to the show.
Great to be back, Michael.
My pleasure. Okay, SLV, this market is moving.
Yeah, I think SLV, though, is starting to run out of steam. So I hate to be the bearer of bad news, but maybe it goes a little bit higher from here. But I had alerted my subscribers around $30 to get in this, and now I'm alerting them to start to exit this thing or at least trail your stop loss. It looks like silver's had a very, very good move, but I think that the move is ready to culminate around these levels. Maybe it gets to $33.50, $34. I really have a hard time seeing it get through that 34 level with any conviction, at least at the moment. It's going to have to prove it to me.
Okay, got it. So are you out now?
Out.
Okay.
That's it. You know, this is it. If you don't want to get out, it's okay. You just trail your stop, but this is it. The move has been made in the SLV already. It's been a good one, and maybe it has a little bit more upside. You can't rule that out because I think the overall markets may have a little more upside, but I think the upside is very limited here.
Okay. If that's the case, we've got a lower high based on what I'm looking at here relative to the October highs.
Yes.
Are you considering this as a bear market or just a pause in the resumption of a bull trend?
Well, I think right now, if you go back and you look at a bigger time frame, whether you look at the weekly chart or the monthly chart, the silver's pulled back, but it seems like it's range bound to me. You could look at this trading anywhere on the SLV from around $26 all the way up to around $34, $35, but there's nothing to say that it's ready to break through here. I think it's going to need more time to just bake in the oven and trade sideways for a while before it does that. Okay.
All right. Got it. TOL.
Yeah, Toll Brothers I want to bring up today because this stock has been probably the winner of the year. It still has a good pattern on the daily chart. But what I'm looking at is that Toll Brothers, when it gets to around the 34.50 level, and I think that's probably its maximum upside at the moment, it will also come into a potential lower top. And I think that's where traders got to be a little bit careful with this. This has been a great run in these home builders, but they're starting to show signs of distribution to me now. And if the home builders start to roll over, that's a real negative for the overall U.S. economy. And as you know, the central bank of the world, the Federal Reserve, has already been buying mortgage-backed securities. They've been propping this market up pretty nicely, but it's starting to show some weakness. I'm not saying it's ready yet, but I'm just giving fair warning to people out there that are, jumping on this sector at this stage of the game. You got to let this thing really correct more. 34.50, I think, is a very, very big resistance point for this stock.
Okay, well, on the other side of that, let's say sometime next quarter, first quarter of the year, do you see this as a better place to look at this at that point, or do you think that's it, this thing, we're done?
No, I don't think we're done. I do think that there's going to be trading opportunities in here, but if you look at this, the stock from October of 2011 all the way up to, and this goes for all home builders, it's not even just Toll Brothers, I just use them because they're their leading stock in the sector. This thing has had an amazing run all the way up till September. Now it really needs to digest those gains, and then, sure, it'll be another trade to the upside, I believe.
Okay, support levels. Where do you think it might pull back to?
25.
Okay. That's not too bad.
No, it's not too bad, but I think it could get to 34 before it does that.
I mean, Jesus, it went from 14 to 36, and
yeah.
I'm rounding. You would expect to pull back to there. Okay.
Sure. I mean, that would be nothing wrong. It would actually be healthy for the stock to do that instead of just going up in a parabolic manner.
Right. Okay, I got it. All right, QQQ.
Yeah, the QQQ has had an amazing move, predominantly led by Apple for the most part. But this thing now is starting to get to lofty levels. It's had a great run since, I guess, the pivot low was made on November 16th when it traded as low as $61.31 a share. Now, you have a little bit of upside left in here, but it's minimal. So I think traders that are getting cute with the overall market now, maybe got a little bit more upside in here, but we have a lot looming out there, and I think traders should start to, trail the stop loss if you got in here or anything like that. But there's just a little bit more upside left in this. I'm saying maybe $1 or $1.50. That would be about the extent of it.
Well, I'm looking at today's price action, and correct me if I'm wrong, but isn't that a spinning top that we're looking at?
Yeah, you have a nice little narrow body bar, a nice little doji candle potentially, which is always a potential signal. There's also a gap fill there. I'm not saying it can't go a little higher. I do think, with the momentum, especially with yesterday's big reversal day, you had a lot of momentum. And, we've been bullish and long the market, but now I'm just going to put in the warning sign to a lot of traders, don't look for too much more.
Well, and using gap theory, just for the audience so they can get it. I know that you're well aware of this, but you've got your breakaway gap where this thing started, your continuation gap, which we've had, and then possibly the exhaustion gap you had today. So
possibly, it's very possible. But either way, even if it's not ready yet, it's going to be ready very soon to pull back, and it could pull back in a big way.
Got it. All right. Well, and when you say that, do you have any? Pull back to.
Well, you could pull back right away. You could go back and fill those previous gaps at 64 and also at 62.
Okay.
So those would be right off the bat. You could fill those.
Good. I'm glad you brought that up. All right. Now, special dividends by the end of the year. What do you got there?
Well, right now you have a lot of these. You already saw Las Vegas Sands, Costco, I believe America Online, AOL. They've all announced these special dividends before the end of the year. This is helping to keep these markets buoyant. And that's one of the reasons why I think there could still be a little bit more upside going forward. And today's spinning top on the Qs is not the top, because these special dividends are in play, and a lot of traders out there are going to be a little bit hesitant to short the market. So, you get a company like Google that has a lot of cash, or a company like Microsoft with just tons and tons of cash, Apple with tons and tons of cash. People are going to be hesitant to try to go in and short these stocks. And I don't blame them, because who wants to get stuck paying that dividend, especially if they come out with a special dividend of, $5, $7, $8. It could be substantial. So I think this could help keep the markets somewhat buoyant in the near term, but that will fade as we get a little bit deeper into the end of the year. Today is already November 29th, so basically you only have basically a month and a day to go before the end of the year is up, and a lot won't happen before Christmas. So I think the market could have a little bit more upside here, but traders got to be real cautious now.
Okay.
Easy money's been made.
I got it. Well, interest rates and stocks before we go. What do you think?
Well, I think stocks have a little bit more upside. I'm working on the calculation for the S&P 500. I'll probably have that up for my members sometime tonight. So if anybody's interested, come over and check it out. But as for interest rates, we're really in a range with the interest rates. If you're looking at the 10-year, this thing's in a range between 180 and 155. Right now, it still looks like rates could creep up just a little bit, but I don't expect much. I think this is the range we're in, about 20 basis points, and that's where we're going to be for a while. The same goes with the TLT, Michael. I've been on your show countless times, and we've talked about the TLT. And like I said, from 120, 127 high to maybe 120, 121 low, that stock is going to stay in the range, and that's what the bond market's going to do.
Okay. Got it. All right. Before you go, one last one. The U.S. dollar. I want to get your impression on that one.
Yeah, right now, I actually did some work on the dollar last night mathematically, and what I did come up with is that the dollar probably has just a little bit more downside, and it looks very poised on the daily chart to hold up around, the 79.50, 79.60 level. So I don't think there's a lot more downside for the dollar here. It could go a little bit lower. It's showing pretty good strength in here. It's held up pretty well, even though it's pulled back from our expected high of around 81 and a quarter on the 16th of November. But now, the dollar's starting to look a little bit attractive to me down here at 79.60.
Yep, I ran my cycle time work on that one, and it gave me a time target there, December 7th for me. So we'll see how that pans out.
Okay, yeah, that's very, very is very, very possible.
Yeah. Now you always have events that people can participate with. You have anything coming up for us?
We do. We do have some events coming up. My partner is hosting a special webinar for members, and that's going to be on, I believe, the 30th, this coming Friday. And then we do have another webinar that I will be conducting. You'll get all my cycle work, you'll get all my proprietary work, and that is going to be on Saturday, December 8th.
Okay. And give everybody a way to sign up for that.
Sure. Come on over to the website. Go to inthemoneystocks.com, and you could hit the education tab, and you'll see all the information right there.
All right. That sounds great. All right, Nick, thanks so much for coming on the show.
Great to be back, Michael. See you soon.
My pleasure. All right, everybody. Nick Santiago, President and CEO, InTheMoneyStocks.com. This guy's threaded the needle countless times on our show. In some cases, less than 1/100th of a penny off on a forecast that came a month in advance. This guy's really, really good. You got to get into these webinars. It's a must. All right, coming up next, Christopher Vecchio.